The primary market has been quite active in the first half of this fiscal year, and we've seen several new public offerings coming up. In fact, the number of IPOs launched during the first half of fiscal year 24 has been the highest since fiscal year 8. According to Prime database, as many as 31 IPOs managed to raise a cumulative 26,272 crore in this period. Now put it in perspective, during April to September of 2007, we had 48 IPOs, but they only managed to gather 21,243 crores. Also in the first half of fiscal year 24, it started off a bit slow with only 10 IPOs launched in the first 4 months. But things started picking up in the past 2 months, especially with the benchmark Nifty, Nifty Midcap 100 and Nifty Small Cap 100 indices hitting new lifetime highs. Now what's even more fascinating is that while the number of deals in the first half of fiscal year 24 was 2.2 times that of the same period in the last fiscal year, the amount raised was actually 26% lower. Now in the first half of fiscal year 23, we had IPOs worth rupees 35,456 crore, and this is mostly because of LIC's 21,000 crore, which played a big role. Now, the whole trend can be attributed to the strong performance of the secondary markets. I mean, when the secondary markets do well, it tends to boost investor sentiment, and we're seeing that reflected in the IPO market as well. Positive investor sentiment in the primary market is usually a result of strong performance in the secondary markets. Now, what's really exciting though is that the IPO wave seems to be going strong, and there's a promising pipeline for the rest of the year. It's pretty clear that there's a lot of confidence and interest in the market, with foreign and domestic investors confident in India's long-term growth story. Now let's talk a bit on securities transaction tax. The STT, or the Securities Transaction Tax, is a tax implemented in India since 2004. Now this was designed to replace the previous system of levying a tax on securities transactions known as a stamp duty. Now its primary purpose is twofold: to serve as a source of government revenue and to act as a deterrent against speculative trading by increasing the cost associated with trading activities. The initiative behind introducing STT was also to curb evading capital gains tax on profits earned by transacting in securities. Now notably, the revenue generated from STT for the central government has shown remarkable performance, exceeding 50% of the annual estimate for fiscal year 24. To put it into numbers, approximately rupees 14,000 crore has been collected in the first half of this fiscal year, compared with the full year target of rupees 27,625 crore for fiscal year 24. Now, several factors have contributed to this impressive collection. Firstly, robust equity markets have created a conducive environment for trading. Secondly, increased transactions in derivatives have further fueled this growth. Lastly, the addition of new investors to the market has also played a pivotal role in enhancing trading activity. On the back of this, the STT has evolved into a contributor to the government's overall revenue. Having said that, this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.